Legends, what is going on? Hope everyone's well. Just thought I'd jump on really quickly to, just give you guys a little bit of an insight on how you can, look for trades and remove the frustrations, I guess you could say, and, the confusion around everything. Okay? So what I'd want to start off with is that the markets can only move two ways, right? Long and short. Yeah. So basically, there's only two directions, long and short, and then, you can say we go sideways, but in these little sideways channels, we can still play long and short game. So this will be pivotal. So right now, it is a 50% and 50% decision, whether you take a long or take a short, right? That's the only two ways the markets can go. Now, the user errors is where do we take a trade from? Where do we take a trade from? And then our stop loss. Okay. So these are the two things. And now the rest of the market we can't control. Okay, we can't control if the market just wants to go haywire because of some news and things like that and the anomalies. It's like playing roulette, okay? And you've got black and red, and then you've got the zero or the double zero. That throws all your odds out with everything. But with trading, okay, long or short, 50-50 decision. That's it. Am I going to take a long trade or am I going to take a short trade? So how do we get the bias? Okay, so with this instance, usually we go with the higher time frame trend or momentum. So basically what we want to be doing is going with momentum from a higher time frame. Now, this can be, a 4 hour time frame, a 5 hour time frame, but usually if you're trading on, say, a 1 hour time frame, you want to go to a higher time frame than that and then check your directional bias, okay? Whether that's bullish or bearish, long or short. Okay, so if you're trading on a 4 hour time frame, you'll be looking at a daily bias, or if you're trading on if your entries are on a 15-minute time frame, you're looking at a 1 hour bearish or bullish bias. Okay, so for instance, right now, let's go because I look at a 1 hour time frame. Okay. So I usually go up to that 4 hour time frame to look. And if we've got bearish market structure, which we do, okay, then my idea for a trade is shorting the market. So I'll go down to the 1 hour time frame. And now all I'm looking for is the areas of value where I want to trade out of. Okay. So I've identified that I want to look for a short. Now the user errors are where do I take a trade from and stop loss. Okay. We've done the hardest part. We've identified the direction. Now, this is a 50-50 decision, right? But if we're trading in the direction of momentum, we will then increase that percentage for the short side going down because momentum's going with that. Even if this increased to a 60%, 40% chance, this is an edge in the market. Okay? Casinos have the smallest edge ever and they are profitable by billions, right? And they're very, very small edges they've got. But because it's a big data size and sample size, they make a lot of money. So all we want to do in trading is put the favor into our court just a little bit more. So right now, I have identified that we are bearish, right? We've got the bearish action here. We got the next leg down here, okay? And then we got sideways. So markets will expand and go sideways. Now, where do I trade from? All right, let's zoom in a little bit. Where do I trade from? So if we are going down and we're bearish, all I want to do is look for the highest point in this range. Okay. So I'll draw a line here, which what we call is resistance. And this will be our support line, right? Because price is getting held here, so it's getting supported. And up here is resistance. So resistance is, pushing down or getting rejected. Now, this is all I can do, right? So I'll zone these here and here. So where do I take a trade from? I'm trying to get as high as possible in this zone. So what I want to do is I want to chuck a short trade in here, okay? And take my profits down here. So that's all I can do. Now my entry is secured. What about our stop loss? Okay, our stop loss. What do we do with that? So you can do this a few different ways. You can use an indicator called ATR, right? So average true range, which bases it off volatility and on that time frame. That's what institutionals, hedge funds and that do off ATR. Or you can just put it above market structure. Now we don't need to overcomplicate things when we're learning out, when we're learning. We want to fine tune when we get the process down pat. Okay, so 50-50 decision, long or short. Cool. We've identified the short because we've got directional bias, which is, bearish action right now. Then it's identifying the highest point in here because the bulls are fighting and pushing up, but then we're getting rejected here. So this is where they're getting tired and the bears are coming back in to push down. So I'm looking for an entry in this area somewhere. Now my stop loss. Okay. Let's bring that down in here. My stop loss will go above structure. So depending on how aggressive you want to be, you can have that above here, or you can have that a little bit higher up to give it a little bit more wiggle room. So that is up to you. So this is why I call this the user errors, right? Because we can control where we put our stop loss, but sometimes we might take a good profit or a good win and have a really tight stop loss here just above and we push up and then come straight down. And this is what we call a risk to reward of 5-1. So if we're risking $1,000 on this trade or 1% of our $100,000 account, we would make $5,000. Now, if you move this up a little bit higher, right, we're still risking the same amount, 1%, which would be $1,000 on a $100,000 account. We're making $2,500 on here, or 2.5% of our account. So this is really crucial of where we put our stop loss, okay? Usually we like to aim for a 3-1 because that means we only need 33% of our trades to be winners and we're still in profit. So we can actually lose nearly 7 trades out of 10 and still be profitable. Okay. So trading is all about statistics and facts. We need to remove emotions because we don't have to have the highest win rate to be profitable. Okay. We just need a good psychology and trust in the system. So that's how I look at trades. Very simple, very effective. Okay. Long or short, that's all we can do. 50-50 decision. Once we understand direction or momentum, then we can start to move that percentage over to the long or the short side a little bit more, and this gives us our edge. That's all we can control. Okay. And then where do we trade from? And our stop losses. Now, sometimes the markets do wick up and take us out. That's okay. This is why we have our risk to reward and risk management for our losses. So, this is how I look for trades. I try and break it down super simple. Hopefully, this helps you guys in the future or now when you're trading. If you want any more questions, if you need any answers, reach out. Always happy to help. And yeah, see you on the next video.